Kucoin offering 100% APY for 7 days, but CZ doesn't like it. Bitcoin hash rate continues sharp plunge as miners give up. Chainlink staking launching on 6th of December. We ask, why is staking so important to tokens? Messaging platform Telegram plans to launch its own crypto wallet and decentralized exchange. NFTs are officially live on Uniswap. Pudgy Penguins snowed in collection sells out at Sotheby's, and Porsche to launch 7,500 NFTs for use in a virtual world. Hello, everyone, and welcome to the Assets of Value podcast. Today, on December the 1st, and every day, we connect to give an industry insider's perspective on crypto, Web3, and NFT topics. We are the founders of Assets of Value, a Web3 research organization. Our podcast is not to be taken as legal or financial advice. Abe, first of the month, what are the markets looking like today?
Bitcoin is following the trajectory we predicted in the last episode. It already crossed 17.1k and the market is recovering. It's a pretty good sight to see because we have been in a downtrend for months and months, and we almost forgot what a bull run or bullish momentum looks like. I think this is a time that investors, the traditional and Web3 investors, take profits around the Christmas, but there's no profit to be taken. And I think it's a bullish point because recently Brazil also planned to accept Bitcoin as a legal tender. So these are bullish times for crypto. And if you are in the space, just be patient and you will get a lot of buying opportunities to set up your portfolio for the next bull run. And the next bull run will be juicy, will bring us juicy ROIs.
For all our listeners who have joined us, new and old, stay tuned for our future podcast series because we will always be checking in on the market, revisiting what on chain analysis is telling us, and giving you our thoughts on when we think the bottom is in or if the time presents itself to start dollar cost averaging into the market as an investor. For sure, we've seen this kind of bullish relief rally whilst we're in this downturn. How long will it last, do you think?
Till December end, probably, because on December 14 or 15, Fed will pivot. Pivot is a simple term representing the actions Fed takes to improve the interest rates. So whenever Fed improve the interest rates, risky investment opportunities like crypto becomes less attractive to investors, and they just prefer to hold cash. They can put their money in their bank account and they can get maybe 7 8% interest, and they'll do that rather than risking their asset in a difficult market situation.
Yeah, we had a bit of news yesterday, and it seemed like the Fed is looking at a 50 basis points increase as opposed to the 75 increase it was alluding to in the last Fed meeting. So potentially the short-term relief rally is in line with the comments made by the chair yesterday. So yeah, we'll be monitoring this and reporting back as we see price action developing. Exchanges are still in the news, and this time CZ doesn't like the fact that KuCoin is offering 100% APY for 7 days. A lot of FUD around this. What's actually going on?
Let me tell you straight that no exchange, no centralized exchange is safe. Be it KuCoin, be it Coinbase, be it Binance, nothing is safe because there's always a risk of third party failure, single party failure, and a hacking. And when you have all these three risks together, no exchange is safe. But let's face it, Binance eliminated FTX because it needed monopoly. And KuCoin, with its attractive policies, for example, KuCoin was offering little shy of 120% to newcomers. And there are a lot of limitations to what they can stake, what they can, how much money they can put in, and for how many days. But effectively, KuCoin was trying to retain their users, gain new users, and gain new liquidity. And CZ sees it as a threat to Binance monopoly because Binance cannot afford to offer such percentages because their user count is so big and their KYC procedures are so tight, and they cannot just simply afford to give these kind of incentives to them.
I'm surprised that CZ is worried. I mean, Kucoin does not have the reach, the brand recognition, the user base that Binance has, but yet CZ is throwing his weight around. Well, what did he actually do or say? Because obviously there is a repercussion where users are now beginning to withdraw money from Kucoin. Did it spark on the back of a comment by CZ?
It all starts with a tweet that the FTX saga and Alameda situation started with a tweet. And similarly, CZ tweeted that if your crypto custodian of your or your crypto exchange is offering you insanely high APYs, that means these platforms or these exchanges are risky. That's what he tweeted. And it's a bit of a code, and we need to decipher it. And KuCoin falls into that narrative pretty easily because KuCoin is offering high APYs, which is insanely high. Of course, if you are just seeing the APY numbers. And yeah, this is what's happening.
CZ flexing his muscles yet again. And I think you're right in the sense that we've got to decode this because CZ coming out and saying no exchange can offer such high percentage of APY. Potentially in the next bull run, when we do have increased liquidity, he could actually offer a lower rate of APY, i.e., not giving as much back to the users or customers and retaining the liquidity for himself or for their own treasury or in custody of those user funds, and limiting and reducing the what's paid back to the new customers that it brings on board. So certainly I think CZ is not only flexing his muscles but also setting a precedence that low APYs is potentially a sign of security. Interesting play there. Let's move on to Bitcoin. Although we see the price rate pumping, the hash rate continues a sharp plunge as miners give up. So we've seen this correlation between hash rate and miners. And we spoke about this about a week ago to say that, look, there is a price point that miners will give up. Is now the time, or will miners continue? We know that energy prices are going up. We also know that CZ had set up a fund to bail out miners. Why are they capitulating now? And could they survive if they are?
Ideally, the Bitcoin price should be about $22,000 for all the miners to be profitable. If the miners have started their business in 2020, then the price point falls to 19K. If they are early in miners, for example, from 2013 or 2015, then their hard tech value, that means the value of Bitcoin for them to make a profit on mining business is 15.8K. And when you see Bitcoin approaching 15.8K again and again, it just rebounds because nobody is there to sell. We know that miners are not selling at a loss, they have to break even at least. We know that whales are not selling because they withdraw Bitcoin and Mars to their wallets. We know that exchanges are not selling. We know that nobody is selling. And if nobody is selling, obviously the price has to go up.
So then what's this figure bounded around of like 12K or 10K? If no one is selling, why is there such a consensus that Bitcoin is going to drop to potentially $12,000 or even perhaps lower, Ethereum hitting three digits? So it doesn't make sense to me. I'm not sure if I'm missing out something here, or are we waiting for another catastrophe to take place?
Let me ask our general viewers, like, please think who is making this consensus? Who is saying that Bitcoin is going to 10K or Bitcoin is going to 12K? Who is saying this? Who is behind this pure wisdom of or pure financial investment knowledge? Who is behind this? And are they the same people who tutored that Bitcoin will be going to 100K last year with all their fancy charts, all their fancy calculations, including plan B, including plan C, or I don't know how many plans there are. But I don't see Bitcoin going to 10K or 12K anytime soon. If there's a global emergency, obviously Bitcoin will go down. But from a crypto perspective, I don't see it happening just yet.
Very interesting insights there. Let's move over to Chainlink and its staking launch on December the 6th. That's a long time coming, but why is staking so important to tokens and why does it take so long?
Whenever project launches staking, By default, at least 50 to 60% of the tokens get staked on the network. And that brings liquidity crunch, and that gives the project an opportunity to increase the inflation and print more coins or release more coins into the supply so that people can absorb that extra liquidity. This is the fundamental concept behind staking. One, it's more efficient. Obviously, we all agree that proof of work is less efficient than proof of stake. But secondly, it gives the opportunity to rise inflation and devalue the currency. I think Chainlink has been selling a lot of its coins throughout the bull run to take out huge profits. We know that Chainlink is an awesome project. Every project uses Chainlink's VRF, and it's a completely trustworthy, dependable system that Chainlink has right now. But it gives Chainlink no excuse to increase the supply to the system and take profits at an enormous level. So that's why they are doing it. They are just introducing staking so that they can sell new tokens. They can benefit because the circulating supply will be going down, and given the buy side pressure will remain constant, then they can sell more tokens and more coins to the system.
Okay, that's a good breakdown. But to quickly close it off, I thought that the tokenomics are defined before the smart contract is deployed. So, how does the staking element increase liquidity? Yes, I get the fact that they were selling off in the bull run and banking their profits, but the supply itself is being taken off the market via staking capabilities, but the overall supply of the actual tokens and its unlock periods, that doesn't change, right?
No, if the token supply is capped, like Chainlink has capped its supply at 1 billion, there won't be new tokens, but there will be tokens released into the system because we know that team holds a certain number of tokens and treasury holds some certain number, and they can't just sell into the market, right? Because if there are no buyers, who will they sell to? And if they are continuously selling the token's price, the valuation of the token will fall down. That's why Chainlink has stayed below $38 throughout the bull run. Chainlink is the least performing asset in this bull run. Least.
Yes, I remember investing in Chainlink and only getting frustrated where I was seeing Solana reach the great heights it had. We now know that that was potentially artificially created. But then also, when I'm comparing it to Atom, for example, that was seeing a much bigger increase as well. So when it dipped down to, I don't know, $17 or so, it just kept going further down. Whereas other layer ones, Atom in particular, I'd moved my funds into there. Um, really interesting take on that. Conscious that we're fast approaching running out of time, so we'll just whiz through these last few ones. Messaging platform Telegram is planning to launch its own crypto wallet and decentralized exchange. We spoke about this a good few weeks back when Telegram came out announcing its usernames and the ability to bid on those to secure a username. Now it's coming out to launch a crypto wallet and a decentralized exchange. That seems like it's a good move because of the ecosystem that it has and the user base that it has. Do you think we will continue to see these Web2 companies to onboard their own users and their own ecosystems by moving their user base onto the blockchain? And what can we expect from Telegram and this decentralized exchange?
That's a possibility that each Web2 platform creates its own blockchain. And that's what's going to happen with most of these big Web2 organizations. But Telegram has its differences with most of these big organizations because still now it has functioned as a free, censorless platform. And I think it sets a precedent. Telegram already has its cryptocurrency, TON, TON, but they don't have a specific infrastructure to handle all the users' transactions, etc. For example, the Tor network, it's not really optimized to handle more than 50 to 60 transactions. And I think it's necessary for Telegram to build a decentralized exchange so that they can put these usernames for sale, and maybe they can do some fancy things because it's all about businesses making profit and revenue and sustaining itself.
Yes, you bring up a good point. Even though they do have an ecosystem of users and their own current technologies, branching over to a new infrastructure could potentially move into some teething problems as they find their feet with this new setup around blockchain and especially around crypto wallets and decentralized exchange. We will see how that transpires in due course. And just quickly, some NFT news. So, starting today, you can trade NFTs across major marketplaces using Uniswap to find more listings and better prices. Uniswap team is airdropping $5 million USDC to historical Genie users and offering gas rebates to the first 22,000 buyers. Not sure why they've done 22,000 buyers, but they've got to cap it at some point. But yeah, super bullish to see NFTs officially being live on Uniswap. Pudgy Penguins Snowed In collection is a complete sellout at Sotheby's. The rare Pudgy Penguins NFT sold for an average of $12,900. That's amazing in this bearish market. That's phenomenal. It's great to see NFT art being sold in this traditional auction houses. And Porsche is to launch 7,500 NFTs to use in a virtual world. So the German luxury car manufacturer, it will be significantly ramping up its Web3 efforts after unveiling an upcoming NFT collection of customizable tokenized vehicles. So a lot of activities happening around the NFT space, but not surprisingly, this is coinciding with Art Basel, a major NFT festival taking place in Miami as we speak. Abe, I'm always interested of your thoughts as we wrap up. What micro gems are you looking at? Last week you said GameFi and Fuse. Is there anything to beat those just yet? Or what is it that you're researching on?
I'm interested in two projects. One is Division Network, which is DVI. The ticker is DVI. You can find it on CoinGecko. And the other one is GFI, Goldfinch. These two are in my watch list. I'm not currently buying it, but I'm just waiting for better prices and better stats from these projects because these are very micro cap projects. For example, these are less than 10 million in its market cap. And when you consider these projects, do not buy them yet. And when you really buy them, make it a single buy, non financial advice, obviously. But what I do with low cap coins is that I don't do DCA on it. I just buy it once and forget. That's my strategy. And when you start DCAing, you better start DCA in high caps because those will be sustainable and those will be performing in the next run for sure.
Love it when you give us a bit of insight onto what you're working on. Fantastic. As always, stay tuned for future episodes where we can give you updates and potentially an indication of when capital is moving from smart money into this mid to lower cap coins. It's been super fun. I'm glad you were able to jam with us today. That's it. Until next time, thank you, everybody, and we're signing off.